Hi, for today's topic, we will discuss about subsequent events. This is aligned with ISA 560, all about subsequent events. For definition of ISA 560, subsequent events are events that may affect financial report, and these events occur after the date of the financial report. Many financial reporting frameworks specifically refer to such events. So there are two types of events that may affect the financial reporting. The first one is those that provide evidence of conditions that existed at the date of the financial report, and those that provide evidence of conditions that arose after the balance or after the date of the financial report. So these are examples of subsequent events. So in this slide, these are events that may require adjustments of the books. So the first one is settlement of litigation after the balance date, but relating to the events before the cutoff date. So it was previously recognized as a liability, but as reporting requirement goes, you need to adjust it. The second one is realization of receivables after the balance date, which had been recognized as uncollectible in the financial statement. So in this case, we already recognize it as doubtful accounts, but after the balance date, we had collected, or the client had collected, the receivables. The second type of subsequent events, which requires only disclosure in the notes, these are events which happened after the balance date, but does not have a related events before the balance date. So here are the examples: sale of bonds after the balance sheet date, business combination after balance sheet date, and issuance of shares after the balance sheet date. So these events had occurred after balance date. Obviously, they have an effect on the accounts, but the effect of this is not yet related to the accounts as at the balance date. So it only requires the accountant or the financial accountant to provide disclosure of this information. As you can see, these are important information, but the transaction had happened after the balance date. So as an auditor, our objectives are to obtain sufficient appropriate audit evidence about whether events occurring between the date of the financial report and the date of auditor's report that require adjustments of or disclosure in financial report are appropriately reflected in that financial report in accordance with the applicable financial reporting framework, and to respond appropriately to the facts that become known to the auditor after the date of the auditor's report, that had they become known to the auditor at the date may have caused the auditor to amend the auditor's report. So there are three dates that will be important in our discussion here. The first one, of course, is the balance sheet date. The second date is the date of auditor's report. And the third date that we have to be mindful of is the date of issuance of the financial report, or the date where the financial report had been approved for distribution. Okay, so if the event will be between the date of financial report and date of auditor's report, so the auditor shall perform audit procedures designed to obtain sufficient appropriate audit evidence that all events occurring between the date of the financial report and the date of the auditor's report that require adjustment of or disclosure in the financial report have been identified. The auditor is not, however, expected to perform additional audit procedures on matters to which previously applied audit procedure have provided satisfactory conclusion. So which means if you already been satisfied on the evidences that you obtain, no need to perform additional procedures. But for subsequent events, if it is required for you to perform additional audit procedures which will provide you with additional proof or evidence, okay, which will affect the financial report, then you have to perform it. Now, if the subsequent events happen between date of auditor's report and then date of issuance of the financial report, so the auditor has no obligation to perform any procedures regarding the financial report after the date of the auditor's report. However, if after the date of the auditor's report but before the date of financial report is issued, a fact becomes known to the auditor that, had it been known to the auditor at the date of the auditor's report, may have caused the auditor to amend the auditor's report. Then the auditor shall discuss the matter with management, where appropriate, those charged with governance, and then second, determine whether the financial report needs amendment, and if so, inquire how management intends to address the matter in the financial report. So this is quite tough because you are not obliged to perform additional procedure, but you know that it may have been a big factor in your auditor's report. So you have to discuss it with management or with those charged with governance. And if it requires an amendment of the financial report, then we'll try to determine how the management intends to address these events that may affect or will affect financial report. And that's it for the discussion of subsequent events related to ISA 560. Thank you for watching.